As China's influence in Africa grows, so does the controversy. Depending on whom you ask, you'll either get excitement about all the new infrastructure or accusations of neocolonialism. I'm Larry Mikawo.
And I'm Vincent Ni.
We're going to tell you how this relationship became so significant
and what China's economic slowdown might mean for the future of African nations.
Let's start with the basics. Which countries in Africa have an economic relationship with China? Well, it would be easier to say which country doesn't trade with China, and that is Eswatini.
Yes, China isn't really keen on doing business with countries that recognize Taiwan as a nation state, but that's a topic for another video.
We should totally do that, Vincent.
Absolutely.
Can you explain why exactly China has started investing so heavily in Africa? Like, why now?
Well, Larry, it's not really coming out of the blue. China has been building up its investments in Africa for about 2 decades now. And for China, Africa is more than just a massive market for its goods. It's also home to vast natural resources, which China really wants to invest in. The Communist Party also has a strategic policy to gain soft power, which is really at the heart of the party's leadership.
Okay, so it should come as no surprise to any of us that China has become the continent's greatest trading partner. It actually surpassed the United States 10 years ago, in 2009. China's main exports are machinery, electronics, and textiles. But like you said, it's not just a one-way relationship. China imports crude oil, iron ore, cotton, and other natural resources from African countries. This has never happened on such a huge scale. What's making China's presence felt even more is the fact that the US has decreased its involvement in the continent even more after Donald Trump's administration came into power. So, where's most of the trade happening? South Africa, Ethiopia, Angola, and Nigeria are China's biggest trading partners on the continent. There are also countries like Cote d'Ivoire at the very beginning of developing a relationship and a partnership with China. Overall, China-Africa trade volumes amounted to $170 billion in 2017, which is a huge increase from just over $10 billion in 2000.
Yes, indeed, and the Chinese government estimates that this will grow even faster to over $300 billion next year.
Of course, more investment usually means more debt, at least in the short term. Let me give you an idea of the scale of the money owed. In 2017, Zambia's total debt amounted to $8.7 billion, almost 3/4 of which is owed just to China. For Djibouti, 77% of its debt is to Chinese lenders.
So the question now, Larry, is why are African countries so keen to do business with China rather than other lenders, right? Well, it's often said that China's loans are cheaper and come with fewer strings attached, if you like. What that actually means is that, unlike the United States or the World Bank, China doesn't really care if you have human rights issues or other outstanding debts, or are not transparent enough when it lends money to you.
That being said, this doesn't make the loans any easier to repay. In 2015, a prominent research group identified 17 African countries that would be potentially unable to repay their loans, and that Djibouti, the Republic of Congo, and Zambia are the most at risk. Some countries are relying on gradually repaying their debts to China by shipping specific quantities of oil, but if the price of oil drops drastically again, that might make it all the more difficult for the debt to be paid back. What does this mean? Well, the contracts for the projects aren't public, so we don't know for sure, but it is feared that some public resources might have been used as collateral.
Meanwhile, cracks are starting to appear in China's economy with signs of weakening growth and trade tensions, especially with the United States. In fact, China's stock market was the world's worst performer last year, ending with a total loss of 28%. So that is just adding to the worries. China hasn't really talked about what it actually means, but it is assumed that if there's less to spend, they might give fewer loans and fewer extensions of projects such as railways. In other words, China is likely to start tightening the purse strings. So what does the rest of the world think of China's involvement in Africa? Well, the United Kingdom and other countries criticize China's predatory behavior in Africa, calling it debt trap diplomacy. But analysts like Joseph Stiglitz in the United States say the line of thinking is just sour grapes. China is making tangible changes for people who live in these countries, bringing affordable goods into the market at a fraction of the costs.
Policymakers and governments may be critical of the money being poured into Africa, but the average African isn't.